Right, so good evening, everybody, and welcome to the very first class on advanced market structure. We're going to be having introduction to market structure today, right? So, before I start, it's very, very important that I lay emphasis on this market structure and what you should expect. Now, when it comes to trading, whether you're trading the forex currencies, or you're trading the synthetic market, or you're trading the cryptocurrencies, no matter the strategy that you trade with, there is one thing in common with all of these strategies, which is market structure. So whether you're trading support and resistance, you're trading SMC, ICT, Phantom, Wyckoff, whatever name they call it, not soup, I don't know. Any name that you have chosen to rebrand your strategy as, there is one thing that every of these strategies have in common, which is at the end of the day, you want to be buying when the market is buying, and you want to be selling when the market is selling. So everything still boils down to market structure. So this is like a very, very important topic when it comes to this whole course outline, because if you are able to identify a trend, you're able to spot that, okay, this is in a downtrend, right? Your next problem will now become, okay, where should I sell from? Which is the entries, the exits, inducement, liquidity, and the rest of them. So this is just me emphasizing that what if you can understand market structure, trust me, you've solved 60% of your trading problems. Once you can be in the right direction of the market, you've been able to solve 60% of the trading problems. The next problem is now be where to enter, where to exit, and how to cope while your positions, right? But being on the right trend is the major problem that many people face. So I would love to beg you guys, whether beginners, whether intermediate, whether advanced, or whatever you want to categorize yourself in this class, so long as you're a student of sample, take everything that I'm going to talk about from today as seriously as you can, right? This is no longer introduction to candlesticks and the rest of it. This is what real business market structure starts today, right? So back to the chart. Now, let me draw something. So I'm making a sketch on my screen, and I know that you guys can see this sketch. Now, if you look at this, the first thing that comes to your mind as a normal human being, even if you don't know what this represents, even if you don't know what this is exactly, the first thing that comes to your mind is that this is going up, right? You can say, oh, this is like a spiral that is going to the upside, right? A spiral that's going to the upside, or you can say this is like a wave that is going to the upside, or you can, like, whatever you want to call it, but your at the end of the day, your direction is that this is going to the upside. Now on this same screen, if I should do something like this, if I should just draw something like this, and I ask somebody on the call now to unmute themselves, and I ask you, I say, what do you think this is, right? No matter what you call it, whether you call it a wave that is going to the downside, or you call it like whatever you choose to call it, one thing that I'm very certain of is that what you're going to say that this thing, whatever this thing is, it is moving to the downside. It is descending or declining. Whatever you choose to call this one, you would say that it is ascending, or it is you'd say that what it is ascending or it is what it is climbing, right? But then if I decide to draw something like this now, and I unmute somebody on the call, and I ask them, what is this? Right? Now you would believe me that nobody is going to tell me that, oh, it looks like something that is ascending. Neither is anybody going to tell me that it looks like something that is what? That is descending. Instead, what are they going to say? They'll say that it looks like something that is what? That is moving on the same range. Right? So these people that I asked these questions, they are able to identify that whatever this is moving to the upside. They were also able to identify that whatever this is moving to the downside, and they were still able to identify that whatever this is what just moving in one position. It is not going to the upside, of course. You can see that this is different from what is happening here. This is upside, but this is just like in one place. Neither is it going to the downside, of course, because what it is still different from what is what happening here, right? Now, these are the three basic types of market structure. We have three types of market structure. We have what we call an uptrend, which is what up and trend. We have what we call a downtrend, and we have what we call the ranging or consolidation market structure. Whatever you can remember this one as, right? If you call it a consolidation market structure, whoever you're talking to should understand. If you say ranging market structure, they would still understand. So we have an uptrend, a downtrend, and a consolidation market structure. Now let me explain these things properly. One thing I want you to know and go back home with today is that these market structures, one thing that they have in common, no matter the type of market structure, remember that I established that there are three things that the market can be doing at any moment. Is either the market is in an uptrend, or the market is in a downtrend, or the market is ranging, right? Now, one thing that these three types of market structure have in common is that the three of them have what? Lows and highs. Lows and what? Highs. If you guys remember our class on candlesticks, we established that these different candlesticks, they have what? They have opening, closing, highs and lows and all of it, right? And since the market movements at every point, they are made up of what? Candlesticks. There will always be what? There will always be highs and lows in the market, right? Now, the type of highs and lows is now what will determine whether are we in an uptrend, are we in a downtrend, or are we in a ranging market structure. Let me take that again. I said that these three types of market structure that we have, right, which I made what a schematic diagram of. These three types of market structures that we have, they have two things in common, which is what? They are always made up of highs and lows, right? But then the type of highs and lows that they are made up of is what will determine whether we are in an uptrend or we are in a downtrend or we are in a ranging or consolidation market structure, right? So for the uptrend now, what type of highs and lows do we have? Let me name this low one. Of course, know that these points are the lows. These points are what? The highs, right? So let me name this one now here, low 1, and call this low 2. Call this low 3. We'll call this low 4, and we'll call this one low 5, right? And then let's call this point high 1, call this point high 2, call this point high 3, we'll call this point high 4, and we'll go ahead to call this point what? High 5, right? Now, I want you guys to notice something. if you look at my screen very well, you would see something. This point that I called height low 2, right? Can you see that this low 2 is actually higher than low 1? You know, when you see that something is lower than something, it means that that thing goes below the previous, right? But in this case, low 2 is higher than low 1. This is low 1 here. And low 1 is what? Low 1 is lower than low 2, which means that low 2 is what? Low 2 in this case now is higher than low 1. And if you look again, you see that what? Low 3 is higher than low 2, right? Now, if you look at my screen again, you see that what? The one that I labeled as low 4 is higher than low 3. I hope you understand why I said they are higher. You can see that like low 4, this is what would happen if low 4 goes below low 3. But in this case, it didn't go below low 3. So it is actually higher than low 3. Low 5 is what? Higher than low 4. So if you notice this thing that I mapped out, that you would have told me is going what, to the upside, you would realize that the lows that it has are always higher than the previous lows, right? Low 5 higher than low 4, low 4 higher than low 3, low 3 higher than low 2, low 2 higher than low 1. So it is very okay for me to say that what, that this option is made up of what we call higher lows. The lows are called what? Higher lows. Why are the lows called higher lows? Because you can see that what, each new low is always higher than the previous low. If I should draw low 6 now, right, this is what it's going to look like for price to continue with an uptrend. This is what it's going to look like. It's going to still be what? It's going to still be higher than what? Low 5, right? So which means that for an uptrend to continue, price has to what? Create lows that are higher than the previous lows. So it is very safe and correct to say that in an uptrend we have what? Higher lows. Why are they called higher lows? Because they are always higher than the previous lows. Now for the downtrend, for the highs, we have high 1, high 2, high 3, high 4, and high 5. Remember I told you that these points are the highs, while these points here are what? These points here are the lows, right? These points here are the highs. Now, if you look at my screen, I labeled what? 1 to 5 highs. And if you look very well, you would see that what? Again, this high 2 went above high 1. So high 2 is what? Higher than high 1, right? And if you look very clearly again, high 3 is higher than what? High 2. High 4 is higher than high 3. High 5 is higher than what? High 4. So if you look again, you see that in this point that I told you that is an uptrend, price is what? Price is still creating highs that are higher than the previous highs. Which means that if I decide to draw high 6 now, you would agree with me that high 6 has to go what's above high 5 for price to continue in an uptrend. So which means that if I should tell you today now that for an uptrend to continue, that price has to do what? The price has to create what? Keep creating what? Higher highs. Or that the highs in an uptrend are called what? Higher highs. You would not argue that, right? The highs in an uptrend are called what? Higher highs. Why are they called higher highs? Because the new highs always go above the previous highs. In an uptrend on the chart, if you go to the chart now, for every point where price creates an uptrend, you notice that what? Each new high goes above the previous high. High 3 above high 2, high 4 above high 3, high 5 above high 4. That is when you say that what? Price is in an uptrend. So for an uptrend, for you to say that okay, price is in an uptrend, it means that what? The price is creating series of higher highs and higher lows. Remember that before I started, I told you guys that what these three types of market structure have two things in common. They are all made up of what highs and lows, right? But then to differentiate them now, we've established that the uptrend, the type of highs and lows that it has, are what the higher highs and the higher lows. Now let's look at the downtrend, which is what the inverse. We understand that the opposite of up is what's down. The opposite of ascending is descending. The opposite of climbing can be like declining, right? Like whatever opposite of like whatever is going up is downward, and the rest of it. Now let's look at the downtrend. We're going to name our highs and lows, just like we did on the uptrend. You are going to mean that these points here now are what are the highs, while these points here what are the lows. Okay, so let's go ahead now. Here we're going to have what high one. Here we'll have what high two. Here we have high three, high four, and high five. Here we have low one. Here we have low two, low three, low four, and low five. Right? Now, remember that in an uptrend, the highs were always going above the previous highs. The lows were always what's going above the previous lows. Now, in a downtrend, it's not the same thing. In this case, you can see that what that high two is lower than high one. High two did not go above high one. High three did not go above high two. High three is lower than high two. Then high four is lower than high three. High five is lower than high four in a downtrend. You can see that again. I'm coming back again. You can see this is what I enumerated this as what 1, 2, 3, 4, 5. Meanwhile, 2 lower than 1, 3 lower than 2, 4 lower than 3, 5 lower than 4. Remember, in an uptrend, 2 higher than 1, 3 higher than 2, 4 higher than 3, 5 higher than 4. Well, in a downtrend, 2 is lower, 3 is lower, 4 is lower, 5 is lower, right? Which means that the highs are called what? They are called lower highs. Why are they called lower highs? Because they are usually lower than what? Than the previous highs. Remember that we established that in the uptrend, the highs are called what? Higher highs. Because the new highs are always higher than the previous highs. Or in a downtrend, we're going to call them what? Lower highs. Because the new highs are always lower than the previous highs. Which means that if I should go ahead to create what? High 6, that high 6 will not go above high 5. If it goes above high 5, something has happened in the market, an abnormality, which we're still going to treat in this course of market structure. But let's focus on this what introductory basics, right? So if I should go ahead to create what high 6, this is what it's going to still look like. High 6 will be what? Lower than high 5. And low 6 will be what? Lower than low 5. So which means that it is very valid to say that what? In a downtrend, it is made up of what? Lower highs. Why? The new highs are always lower than the previous highs in a downtrend. Now, this is the lows. We have low 1, we have low 2, low 3, low 4, and low 5. Can you see that in the uptrend, low 2 was higher than low 1? Low 3 higher than low 2. Low 4 higher than low 3. That is why we said that we're not made up of what? Higher highs and higher lows. But in a downtrend, it's not the same thing. Low 2 went below low 1. Low 3 went below low 2. Low 4 went below low 3. This is low 5. And low 5 did what? Went below low 4. And even the low 6 went below what? Low 5. So you notice that each new low in a downtrend is usually lower than the previous low. In fact, you already understand that for something to be going down, it means that thing is what? Going lower. So once you hear a downtrend, what should come to your mind is that this is going to be made up of what? Only low things. Only what? Lower highs and lower lows. Once you hear of an uptrend, what comes to your mind is that something is going up. Is that thing is what? Moving to the upside. That thing is going higher. right? So once you hear of the uptrend, the only thing that should come to your mind that this thing should be made up of is what? Higher heights and higher lows. It is going up. So the only business it has is what? Going higher. Well, you hear downtrend, it means that that thing is going down. That thing is going low. What should come to your head is what? That the highs and the lows are what? Lower highs and what? Lower lows. Why are they called lower highs and lower lows? Because they are always going what? Below the previous highs and the previous lows, right? So that is it for the downtrend. Now, this is the last type of market structure, which is called the ranging or the consolidation market structure. Let's imagine now I bring 200 students from this class now, and I decide that, okay, the 200 of us, let's stay in one room, right? I want all of us to stay in one room. Now, I would want us to play a game as we are in that room. Here's what the game looks like. We're going to be jumping up and down. And let me assume that the 200 people that I picked, we are all of the same height, right? We're all the same height. So which means that we're jumping. If we jump, since we're in a room, in an enclosed space, if we should jump for the first time, our head will probably what? Hit the ceiling. And when we jump to the ground, our legs will touch the floor. We jump again, our head will what? Hit the ceiling. Our legs will touch the floor. Our head will hit the ceiling. Our legs will touch the floor. We jump again, our heads will hit what? The ceiling. Our legs will touch what? The floor. We jump to the upside, our head will touch the ceiling. We jump back down, our legs will touch the floor. We bounce back up, our head hits the ceiling, our legs touch the floor. Head hits the ceiling, legs touch the floor. Now you would agree with me that none of us is going what? Above the ceiling. Why? Because the ceiling is covering us. Nobody has a iron head that can break above the ceiling, right? The ceiling is what? The ceiling is covering us. Why? The floor is making sure that we don't what? We don't break the floor and go to hellfire or whatever is down there, right? So, like literally, this third type of market structure that is called a ranging market structure. You know the meaning when someone says that something is in a range. Let me just give you an example. From last year December, you've not been able to make anything. Like you've not made anything. Your income is just moving from let me say 100k to 300k. You can make 300k today. Tomorrow you're back to 100k. Next tomorrow you're back to 300k. Back to 100k. You're not breaking above that 300k, right? It's always 300k or 100k. But when you have BTC will do what? You get to 90k today, and tomorrow it's back at what? It's back at 70k. Gets to let's say 91k, and comes back to what? 71k, 90k again, 70k again. You would agree that it is not breaking above what? Above this particular level. Neither is it what? Breaking below this particular level, right? Most of the times, this ranging market structure can be likened to support and resistance, just that in the case of what? Support and resistance, it is what? Either support or resistance. But this particular type of market structure is that the two of them must be just like support and resistance at the same time. For every time a price gets to this point, it's rejecting. For every time a price gets to this point, it is what? It is buying. So this type of market structure, which is the third type of market structure, called the ranging or consolidation market structure, is made up of what we call what? Equal highs and equal lows, right? Equal highs and what? Equal lows, right? So the ranging or consolidation market structure is made up of what? Equal highs and equal lows. Price is not going above the previous highs. Remember, for the uptrend, price is what? Putting in highs that are higher than the previous highs. For the downtrend, the price is what? Putting in lows that are what? Lower than the previous lows, or highs that are what? Lower than the previous what? Highs. It is not in one place. It is either moving down in a downtrend or it's moving up in an uptrend. But this one is just in one place, made up of what? Equal highs and equal lows. For each see that something is ranging, that thing is just what? Moving in one place, right? It will go here today, come back again, go back again to that point, come back again. Do you understand? If you look, if I should label these highs 1, 2, 3, 4, 5, 6, 7, right? If I should label these highs, you would see that what? High 1, high 2, high 3, high 4, 5, 6, and 7, they are what? They are in the same level. No 1, no 2, no 3, no 4, no 5, no 6, no 7, and no 8. They are what? They are still in the same level, right? So this is what? These are the three types of market structure that we have: the uptrend, the downtrend, and the consolidation market structure. These are just what schematic representations, right? This is just like an introduction. In our next class, we're going to go to the charts to look at examples of these market trends, identify them on the chart, right? But then there's something I want you to know before this class ends. I know that some of you would have heard people say break of structure. Break of structure. What is a break of structure? You see, for every time, please listen. For every time that price takes out a high or a low, a BOS has occurred. BOS, break of structure, which means that as high 2 takes out high 1 to go above high 1, we have what? A BOS. As high 3 takes out high 2, break of structure. As high 4 takes out high 3, takes out that I mean is go above, right? We have what? A break of structure. As high 5 goes above high 4, we have what? A break of structure. In the downtrend as well, as low 2 takes out low 1, break of structure. Low 3 takes out low 2, break of structure. Low 4 takes out low 3, break of structure. Low 5 takes out low 4, break of structure. So it is safe to say that as price is creating higher highs in an uptrend, it is what? Breaking structure to the upside. As price is what? Taking out the lows to put in lower lows in a downtrend, it is what? Breaking structure to the upside. But the third type of market structure, break of structure, is not happening because they are what? They are on the same level, right? So that is what the BOS means. But there's still one more thing that I want you guys to still take home today, which is the concept of what? Protected highs and lows. Okay. Let's say now. Sorry, let me clear my screen a bit so it doesn't get too. All right. So protected highs and lows. I think if you guys watch like movies that involve like fighting and all of that. I mean movies that you know that you see people say that okay, this is my bodyguard or something like that, right? The work of every bodyguard is to do what? Is to protect their boss. They wouldn't want that. When you say something is protected, it means that what? That the enemies cannot go above them or below them. It's just like Jesus Christ, please protect my going in and coming out. It means that what? That you're anticipating that God covers you enough that no evil fashion against you shall prosper. Right? It means that you're anticipating that you're covered. Protection is just like a covering. Do you understand? Just like a covering. So when you say that a zone is protected, is that you're anticipating, or a protected zone is a zone that what you're anticipating that price does not go above or below. They are protected. They cannot be accessed. Right? But for you to say that something is a target, it's just like okay, there's a target on this boy now. When you see him shooting on sight, it means that that particular one can be what that price can go what above or below them. So minus calling these highs and lows, higher highs and higher lows, or lower highs and lower lows, we have a concept called protected and targeted highs and lows. This is very important when we get to exits and entries, especially, right? Where to target and the rest of it. That's what we're going to emphasize properly on this. But, right? But it is important that I show you what is protected and what is targeted, right? Now, remember that when I introduced this option and I talked about this 1, 2, 3, 4, 5, I told you that high 5 in a proper market structure should not go below high 4. High 4 should not go below high 3. Sorry, I mean low 4 should not go below low 3. Low 3 should not go below low 2. And low 2 should not go below low 1. And since low 2 must not go below low 1 in an uptrend, it means that in an uptrend, the lows are what? The lows are protected. The lows in an uptrend are what? Protected. Because we are anticipating that every new low will not go below it, below the previous one. Every new boss will not kill the previous boss. So every previous boss, they are protected. They are sure of their lives, right? Low 2 will not go below low 1. It means that low 1 is protected now. Low 3 will not go below low 2. It means that low 2 is protected. It is sure that even if low 3 becomes the king today, it is not what? It is not going to kill you. It is not going to kill me, right? Which makes me what's protected. Low 4 will not go what below low 3 in an uptrend, which means that what low 4 is what's protected. So the lows in an uptrend are what's protected lows. But for the highs, if you look at high 2, high 2 took out high 1. The moment high 2 was made the boss, what did he do? He targeted high 1 and killed high 1, went above high 1. High 3 took out high 2. High 4 became the new king and killed what? High 3, went above high 3. High 5 went above what? High 4. Which means that the highs in an uptrend, they are targeted. The lows are protected because you are anticipating that what price does not go below the low in an uptrend, but it must go above the highs in an uptrend, which means that in an uptrend, the highs are what? Targeted, while the lows are protected. Now, the inverse for the downtrend. If you look at this now, for the downtrend, high 2 becomes the king. But it cannot take out high 1. Why? Because a downtrend is made up of what? Lower highs and lower lows, which means that the new high must be lower than what the previous high, right? So which means that high 2 cannot take out high 1 in a downtrend. Neither can high 3 take out high 2, nor high 4 take out high 3, or 5 take out high 4. So which means that what? These highs in a downtrend are what? Protected. Since they cannot take out the previous ones, it means that those previous ones are what? They're protected. So a downtrend, we have what? Protected highs. But for the lows, low 2 must go lower than low 1. And as it's going lower, it means that it is taking out low 1. Low 2 becomes the king, takes out the previous king. Low 3 becomes what? The king, targets the previous one and takes it out, right? Low 4 becomes the king, targets the previous low and takes it out. Which means that what? The downtrend is made up of what? Lower highs and lower lows, but these lower highs are protected highs. Why? The lower lows are what? Targeted lows. So if somebody should just tell you, if somebody should mention protected highs to you, the first thing that comes to your mind is what? Is the downtrend. If somebody should mention protected lows, just know that they are the lows of what? The uptrend. since they must not go what below the previous ones. So when you mention targeted highs, what should come to your head is what? The highs of an uptrend. Since price must take out the previous one to what? Create a new one. So when you mention targeted lows, it means that what? That they are the what? They are the lows of a downtrend. So an uptrend made up of what? Higher highs and higher lows. These higher lows are what? Protected lows. These higher highs are what? Targeted highs. Why a downtrend made up of what? Lower highs and lower lows. These lower highs are what? Protected highs. These lower lows are what? Targeted lows. Why the third type of market structure, which is the ranging or the consolidation market structure, made up of what? Equal highs and equal lows. Not BOS here. They are just moving in the same range, right? So these are what? These are the three types of market structure that we have. The basic three types of market structure that we have, right? This is just like an intro. Tomorrow we're going to go into the charts and look at chart examples before we proceed. I don't know if anybody has any questions. I don't know if anybody has any questions. You can raise your hand up and I'll unmute you quickly. For those people that when somebody is asking, you can type your question on the group as well, right? So be faster. So I can hear you now.
Good evening.
Good evening. Please go ahead. Like
Can
first.
you hear me?
Yeah, go ahead.
Okay. I,
The network is bad. Type your question.
I want
I can hear you properly. Just type it.
to
Sam Branson. I can hear you. Go ahead.
Good evening, ma. And good evening, everyone.
and
Yeah, I can't hear you. Type your question on the Telegram group. Who is this one? All right, Branson, I can hear you. You can unmute yourself now.
Okay. Good evening, everyone. And actually, I came late to the class today, though. Just remember now. My question is, how do you identify micro and macro structure when mapping structures?
We've not got through there. If you're asking any question, if your hand is up, let it be related to what I've just said. I mentioned that this is what the beginning of market structure. We've not gotten to sub-break-on structures or minor break-on structures yet. Let your question be related to what we talked today in class.
All right, no problem. I probably may just come to DM to ask that question directly.
Later. That's okay. Okay, so Gigi, good evening. Gigi 0547. Okay,
good evening.
Good evening, boss.
Yes, so my question is, in ranging or consolidation trend, does that mean that the highs and lows are protected? And my other question is, within a 1 hour time frame, is it possible for this type of three market structure to occur?
Yes, definitely. They can occur on every time frame, sir. You understand? Just that like I told you that the higher you go in a time frame, the more definite the candlesticks become. You understand? You can map any of this on any time frame. Yes. But and also for your first question, the highs and lows of the ranging or consolidation market structure, they are what? They are protected since price is not taking any of them out. You understand? No, I don't know, I can't pronounce the name. Please unmute yourself.
Okay, the question I wanted to ask, he already asked it in his first question.
All right.
Okay.
Moby Quick, good evening. You can unmute yourself.
Okay, good evening. So can you hear me?
Yeah, of course, please go ahead.
Okay, my question is, does it mean that when the highs are not targeted, then we can say that market is no longer on the uptrend, and also for the lows?
Yes. Okay, so I told you that actually when price takes out a level of protection, it is what an abnormality and something has occurred. We've not gotten there. Definitely we will go there, right? We get there. When price takes out a level of protection, what happens? So when we get there, I'll answer this question properly.
All right,
Because of
thank
other
you.
people before. Yeah. Okay. Kelvin Obasede. Unmute yourself, please. I can hear you.
Yeah, good evening. What I want to ask is, are there also a valid market structure and invalid market structure?
Like, market structure is not a strategy. It's just you trying to read price. So you can either read it correctly or wrongly. Do you understand? It's not like invalid or valid. One of the mistakes that people make when it comes to market structure is like interpreting internal highs and lows with externals as well. Do you understand? So it's not like it's invalid or valid market structure. It's not support and resistance, but it is it's either you read it correctly or wrongly. You understand? When you make mistakes, it's just like you now buying when price is in uptrend or selling when price is in uptrend, something like that. Are you clear?
Okay, ma'am, I'm clear. But please hold on. I do not understand the meaning of internal and external. I
You've not
don't.
gotten there. You've not gotten there.
Okay. No problem. Oh, good. Thank you.
Keith, good evening. Let's go ahead.
Yeah, good evening. Please, can you hear me?
Yeah, of course you can. You're not talking. Okay. Bouncing, good evening.
Yes, can you hear me now?
Okay, yeah, I can. Please be fast.
Okay, the question is that this market structure, is it in an ideal sense or is something that is general? Because why I'm saying this is that I have seen structures that for instance, now if it's an uptrend, it will still break high low, but it still continue with the uptrend. You
Okay, so
understand? And again, is there a situation whereby there is actually no visible structure? Like there is, because I know, for instance, I'm not talking about base now. Let me talk about cryptos now. That most of them works, crypto pairs, that most of them works with fundamentals. So is there a way that you can say, okay, there is a trend that is actually no structure? Thank you.
all right. So here's the thing. For your first question, you talked about I told you guys that this is the basics of market structure, the three types of market structure. That's what I'm explaining, right? We're definitely going to get to what happens when price takes out a protected area. We're definitely going to get there. I've said it like twice now. If you know that is where your question is on, relax and put your hands down. When we get there, I will answer your question. Whatever question you're asking should be related to what we did in class today. Not even related, should be on what we did in class today. Now, for your second question, I've forgotten what you want to talk about. I think, can you take the second question again?
Okay.
Go ahead now. I can't hear you anymore. By the way, for the person that wrote the question on the board, you said I mentioned that what an option consists of a series of higher highs and higher lows. How many higher highs and higher lows must form before we confirm that price is in an uptrend? Um, I told you that okay, an uptrend is made up of what higher highs and higher lows, which is correct. But then it's not like 100 higher highs must form before you say price is an uptrend. When we get to when price takes out the protected level, we'll talk about the change of path and the rest of them, right? But then let me just, I'm just going to like say two, right? In a very like surface level. when we get there properly, you're going to understand what I mean, right? For bouncing, I think you can unmute yourself now. Since I don't know, looks like you left already. Bouncing, I can hear you. Go ahead.
Yeah, good evening. Can you hear me?
Yeah, please go ahead.
Yeah, please, can you shed more light on those protected zone and targeted zone?
I told you that the lows in the downtrend are targeted since they're always going below the previous ones. The highs in the downtrend are protected since they're always below the previous ones. The lows in an uptrend are protected since they are never going below the previous ones. While the highs are targeted since they are always going above the previous ones. After this question, go to the video again and emphasize properly on it. So it's either you join below or just go to the video again and you understand. So then just understand that for the downtrend, protected highs, targeted lows, uptrend, targeted highs, protected lows. Okay? So
Okay.
Simon,
Please, in maybe
Simon, good evening. You're gonna meet yourself.
Good evening. Can you hear me, please?
Yeah, go ahead.
Okay, thank you. So please, I just want to ask how we can get the diagram, because I was actually not active when you started. How we can get the diagram that was being displayed on your trading view? How can we get it on ours to practice what you taught us tonight, actually?
There's nothing to practice now. I didn't teach anything for you to go and chat. This is just like schematics. If you want to watch it afresh, you can go to the record the way it drops. You understand? There's no like chat examples here. There's nothing to practice here. Allow me to ask you to do your assignment before you attempt to do that. You can just go to the recordings to understand. But not like you're hoping on the class to practice anything yet. Okay. Q079. Go ahead, please.
Good evening.
Yeah.
Okay, my question is, you taught us on support and resistance previously. Sorry, I'm dragging you back. So my question is, on this market structure, if we see a bearish engulfing or a red candle on our support zone where we are meant to buy, if you are using support and resistance, what are we going to do in that scenario?
Which scenario exactly? So are you taking a market to support and resistance?
Okay, like I'm talking about market structure and support and resistance.
They're not the same. They're not the same. Nobody's talking about
okay, sorry. Let me come again. Can I come again?
Of course.
Okay, what I mean is that this market structure you drew now, like when it gets to the support, it goes down to the resistance. That is the consolidating market.
Okay, yeah.
So what I'm now asking is, for instance, if it has gone back to our support now, we are seeing a bearish engulfing or a red candle. What are we meant to do?
We're not meant to do anything. The ranging market structure means that no matter the type of candlesticks formed, price is what's moving in a range. You understand? It hits that level, it bounces up, hits the level above, it bounces down. So your concern is not even candlesticks. You understand? It's just that price is neither breaking out to the upside or to the downside. You understand?
Okay, thank you.
I think two people have their hands still raised. Those are the last two I'm taking. Still Uzo, good evening. Attempt to unmute yourself. I think you should be able to do that.
Okay, good evening. Are you hearing me?
Yeah, I can hear you.
Oh, okay. So, one of the confusing things about that I experienced about this market structure is the ability to be able to recognize when price has actually created that high. Let's say we are in an upswing, and then when you're able to identify when price has created that high, that external high, and not just those minor highs because price can break structure, but it has not yet created the external distance. So I don't know if you.
All right. So I know that you can hear me, Uzo. I emphasize and I keep on emphasizing. I don't want to hear external and internal on this when you're asking your questions. There's no button there. There are people on this call that are very new that I don't want to confuse. Do you understand? Any question you're asking should be something related to what I took on the class. We would get to minor and soft structures. I know that you know that those ones already, right? We will get there. You can ask these questions. But anything you're asking should be related to this class. If not, you can ask me my DM personally, but not in class settings like this. Please, this should be the last one. If you're not that what you talk about, I will lower your hand and I will mute you as well. Victor, go ahead.
Good evening. Can you hear me?
Yeah.
Alright, please. I just want to know if we would like eventually cover like crypto and synthetic aspects in the course.
Yeah, definitely. Definitely. They're on the curriculum. Just that like it's not being followed like exactly. When we get to synthetic school, when we get to but definitely everything that I talk about actually must be covered.
Alright, thank you.
Okay, last question. Web3 Sim. That's a very funny name. Go ahead, you can unmute yourself.
Hello, good afternoon.
Good morning, sir.
Yeah, I want to confirm something. For the uptrend, is it like how many occurrences do we need to know that okay, this is an uptrend? Or is it like the support and resistance whereby you said after like three or
It's not like support and resistance. When you go to your chart and you see that okay, price is creating a series of higher highs and higher lows. It can be two, it can be three. You just know that well, this is an option. Maybe the reason why I don't want to answer this question is that I don't want to confine your thinking yet until we get to the chart, right? When I talk about the next time our meeting is on Wednesday, when I talk about like what happens when price takes out a protected level and how you know that okay the trend has changed eventually, right? I think that question should be answered properly. I don't know if you understand me. So just relax a bit. This is just like a basic introduction. We're getting there. We'll definitely get there, right? So I think that brings us to the end of today's class. No question, no assignments were given, right? So there's nothing for you to say that you're going to practice. We're meeting again on Wednesday by 9 p.m. Please be as early as you can because we kick off almost immediately, right?